We are now live. Have a good meeting.
Thank you. Good morning, everyone. Thank you for joining us for this special meeting. Yeah, we do have a great turnout, so that is awesome. Hopefully you all received the meeting materials ahead of time. Thank you, Frank, for all your work behind the scenes, getting it posted. So if it's okay with you guys, we will just jump right in. Let's see, we have Christopher Murray joining us from Mountain BizWorks. Hello, Christopher.
Good morning.
Thank you for joining us. Sounds like Yelzine is out on vacation this week.
She's in Boston.
Oh, okay. Well, we're glad to have you. So we're looking forward to a productive conversation. I'll just jump right into the meeting agenda. So the first item is to approve meeting minutes from our August 5th meeting from a couple weeks ago. Has everyone got a chance to look at that? Oh, Rachel has her hand up.
Before we jump into the minutes, let's do a quick roll call.
Oh, yeah. Good suggestion. That thought crossed my mind for a brief second and it just went away. So yes, let's do that. So we can go around and each person just introduce themselves, name, and whether you're a county or city appointee or a voting member. So I'll just go around with what's on my screen. We'll start with you, Frank.
Good morning. Frank McGowan, Interim Community and Economic Development Assistant Director. And I'm a city employee, city appointee, and voting member.
Thank you. Yes, congratulations. We have Carl next on the screen.
I am Carl Alguire. I am the city appointee and a voting member.
Thank you. Kelly Foster.
I'm Kelly Foster with Mountain BizWorks Asset Quality Manager.
Thank you. Rachel.
Morning, everyone. Rachel Nygaard here, county appointee and county employee and secretary and voting member.
Thank you. Dee.
Thank you. Dee Williams, city appointee and voting member.
Thank you. Nikki.
Good morning, Nikki Reed, Community Economic Development Director with the City of Asheville, and I'm a voting member.
Perfect. Christopher.
Yeah, Christopher Murray with Mountain BizWorks. I'm the Chief Credit Officer.
Thank you. Karen.
Karen Amansky with Self-Help, and I'm a non-voting member.
Let's see. Tim.
Good morning. Tim Love, Buncombe County appointee and staff. I'm a voting member.
Thank you. I think I have gone through the whole list here. If there's anyone that I missed, let me know. Oh, myself. Good morning. I'm Maui Vang. I'm the chair of MCCF, and I am a county appointee and voting member. Did I miss anyone?
Dee.
Yeah. I think Dee has gone. You went right, Dee. Perfect. Awesome. So are we good, Rachel, on the roll call? Perfect. Thank you. So if you all have had a chance to review the meeting minutes from August 5th, if it looks good for everyone, I will take a motion to approve the minutes.
I move to approve.
Thank you, Carl. Second, anyone?
A second.
Thank you, Frank. So all in favor, please raise your hand or say aye.
Aye.
Right. All right, a little pop-up about lowering my hand. Well, looks like the motion passes. Thank you, everybody. We'll move right along to old business. The purpose of today's meeting, the bulk of today's meeting, is to take a closer look at the loan request that was presented to us last time at the August 5th meeting. We just didn't quite have enough time to really have a robust discussion. We had some follow-up questions, and so our partners at Mountain Vista have put some work into getting us some answers to our questions. But before we jump into the Q&A part, Christopher, I was wondering if you have the loan request document that Yasmin had, if you don't mind just kind of going through that again for us real quick, just to refresh our memory. It's not quite the Q&A document that we had in Google Docs. It was
Okay. You caught me. I had the other one, the questionnaire one, handy. I'm looking in.
Yeah.
Hold on a second here.
No worries. Take your time. I should have pinged you ahead of time.
No, that's okay. We have a central database for all of our client accounts and loan requests, and I don't see it in there. Let me just check and see. It's normally something she.
I don't know, Kelly, you have access to it as well.
I'm looking for it.
I apologize.
No worries. Take your time. We got the full meeting today pretty much dedicated to just that. So, and then while you're looking, Frank, are you good to touch on a little bit later in the new business section on the future meeting preferences? You have a little bit more context around that. To kind of
yes, I will lean on Nikki a little bit as well. But there is discussion about the future of virtual and public meetings with the expiration of the emergency order around COVID-19.
Okay. So
I don't have that document, so Kelly, I don't know when Yasin submitted it to MCCF where that gets headquartered on our end. So
I'm looking in Salesforce right now.
I don't think it's going to show up there unless it's in the account level. It's not in the opportunity level.
This is Rachel chiming in. I don't know that our board has received it by email. I did summarize many or most of the key data from that info sheet in the minutes that we just approved from the August 5 meeting. If anyone wants to reference that, or I'd be happy to talk through some of those key points. It may make more sense for the lender to talk through that than for me.
I can summarize the overall deal by just my own internal document. I guess if that's helpful to do that at the very least.
Yeah, I think that would be very helpful, Christopher. If you don't want to do that,
I'll give you a relationship summary and do my best not to expose who the actual applicant is. But this is a loan request that came to us from an existing client. We've had a relationship with them since 2018 with a perfect payment history. Originally, we had done a loan at the $65,000 level. It's now paid down to $32,000. None of the funds that we've requested in the $70,000 loan request, none of our existing loan gets refinanced with that. So that loan still stays in place. So this is all money for relocation. So I just wanted to clarify that. The client has been based downtown in arguably probably one of the worst locations for a retail business in downtown. That can be debated, anyways, but they've certainly been challenged from construction standpoints to various things. And so then, of course, the pandemic exacerbated things. They were able to survive, frankly, by accessing idle funds to the SBA, as a lot of our local businesses did. So the business still has continued to grow. It's improved from a revenue standpoint every year, but still hasn't gotten to a break-even point. And I think we talked about that a little bit in the questionnaire that y'all submitted to us. So the decision, was like, okay, it's, staying downtown is going to take, it just isn't going to work, is essentially where they had come to the conclusion. Either we're going to relocate or we're going to close our business. And so we started conversations with them, earlier this year around that. We, put a lot of requirements on them in terms of, financial projections, justifying why the relocation would translate into the feasibility of reaching a break-even point, et cetera. And, I was really skeptical that we would get to where we were comfortable with the feasibility of it. We did get there. Otherwise, I wouldn't have approved it along with our executive director, Matt Raker. And so, the need is just to relocate. They've already started that process. So, they will suffer through a relocation and try to nickel and dime it and make it happen little bit by little bit, as many of our local businesses do. But that makes it much more tenuous. So the request before you is to, basically add to inventory, because they will have a much better retail space, provide some working capital, not by any means a rich sum of working capital, but enough, I think, that's meaningful given the context, provide some marketing dollars. They've learned a lot about marketing. So anyways, and the hope is, and I think, realistically, given where they're moving, it really came down to this being the fundamental decision. Can they really scale their business roughly 40% to get to what really is a break-even point? And, our opinion is that if they can't do that where they'll be located in West Asheville, then, there's some fundamental issues with, how they're running their business. And one of the big reasons to move to West Asheville is they did a survey and had about 100 current clients respond, and 26% of them are in West Asheville. So the bulk of their client base is there. So it made a lot of sense. So, the borrower in this case is low, moderate income, woman-owned business, really, really capable on a retailer, in the sense that they really understand their product, they understand their target market, and I wouldn't say numbers has been their forte, but we do have good financial numbers. But that's, they're not an MBA by background. Their degree is in well, I got to be careful what I say the degree is, because I'm trying to make sure they remain autonomous. So anyways, that said, we've got history here. We believe in the operator. We think it makes sense for them to make this move. And it certainly is predicated upon, a substantial growth. But it's certainly reasonable within context of where they're looking to move. So I don't know if that's a summary to kind of frame things. We're talking about, from a revenue standpoint, going from, 310,000 thereabouts in revenue to 470. So that is a big growth. And so that's where we had to really wrestle with, could we believe that in order to justify an approval? So.
Thank you, Christopher. And it sounds like it was a little bit of a process to get you to a point where you strongly believe in that 40% revenue growth, because that is a big jump and probably one of the key assumptions to approving this deal.
Yeah, I mean, so often when you're dealing with projections, and we do a lot of startup financings, and this fund has supported Mountain BizWorks in approving numerous startup loans over the past few years, and they're always, if it's a startup, it's a best guess projection, and you're vetting it for feasibility. And so in this case, there's a benefit to having some history, because you can look at it and see, okay, how likely is it, based upon the historical record, for them to grow. So that's a benefit, but it also can be its own, kind of downer, so to speak, in the sense that, they're almost handicapped by that, in the sense that, okay, well, if that's all they've done, how can you possibly believe that? So a lot of times, if we were starting from scratch and didn't have the history, we probably wouldn't be wrestling with the feasibility. It would be inherently believable, given, the economy in West Asheville, particularly for retail businesses.
And just to clarify, is that 40% year over year, or what's the time frame for that 40% increase?
That would be, in the first 12 months in the new location. And, there will be a seasonal element there. And that was one of the things we addressed in the questionnaire is that we do expect, and you see this often with businesses, that honeymoon period.
Mm-hmm.
And, and of course the fall season tends to probably be advantageous from a tourism standpoint. You got, the holidays and so on, but we do expect to see a curtailment from a cash flow standpoint in the first quarter of next year. That would be understandable.
Got it. Well, thank you for that summary. At this point, I'm going to open up the floor for additional questions from the committee. I know you gave us some really good in-depth answers on the Q&A. So we, in the absence of questions, we could go through the Q&A document, but I just wanted to give an opportunity for anyone else to speak or have any additional questions based off of what you just presented. All right, Dee, you're up first.
Thank you, Mallory. Hi, Christopher, D. Williams. Is this a Schedule C operator or owner?
It is a single member LLC, so there are no
Single
other.
member. Okay, single member.
Yeah.
This income flows to the 1040. Is that right? What was the net operating income for 2021?
The net income, scroll down here,
Okay.
for 2021 was 308,730.
Net income after
Oh, you
expenses?
got our net income?
Yes, sir. Not gross, net.
Okay, net income before taxes was negative 10,000.
There were no taxes. Okay, good enough. Was negative, what was that?
Negative 10,772.
Okay. Was there any Section 129? Any depreciation in that net operating?
No, there was no depreciation. I'm looking at a financial summary that Yasin created here, so I'm not looking at the actual source document. And normally there was no add back for depreciation. So
Okay.
So
Your
again,
loan, okay, Mountain Biz loan, Mountain Biz cap loan, the initial loan. What was the term of that? And what was the aggregate amount of that initial loan?
65,000. Let me just double check to make sure I'm not misspeaking here. And 66.5. Excuse me.
Okay, and so you're about, when was that made? 2018 was a startup loan, 2018?
The date that was 10/22 of 2018.
Okay.
And it was looks like a 6-year loan.
Okay, so it was 6 years. And so we're asked to do an 84-month loan for working cap. Was that primarily working cap as well?
This one was a startup.
Right,
A
working
lot of
cap.
times we do actually for, we go out to 10 years depending on the size of the loan. So if this had been probably like 125,000 or something of that level, it probably would have gone closer to 10 years.
Okay,
So it just depends. There's a lot of variable.
from a risk, from an actuarial standpoint, most working cap loans depend on the useful life too of any asset. So you did a 66-month loan, correct? Was there any assets that were bought with this $65,500 loan? Were there any assets?
Well, there would be trading assets. In that case, there would have been inventory that they needed to start their business. And I don't put a whole lot of value in trading assets because they naturally, revolve. So there's not a lot of recourse in the event a business fails from trading assets because invariably by the time you know that they're not going to be able to make their loan payment, those assets are gone.
Okay, great. And they had 2 full-time employees and 1 part-time. These were W-2 employees. What was the 940 report of wages that were paid in 2021? Did you have access to that?
I don't believe we have a 940 report, but let me just see.
That would be good. So we could see actual wages that were paid. I'm just trying to get an idea of cash flow. And I'm going to cease with my questions. I do have some more. We've got other players in the room.
Yeah, when it comes to cash flow, this was one where it has a negative debt coverage ratio. So when we look at cash flow, and a lot of times for these small businesses, their profit and loss statement doesn't necessarily reflect what is required for the owner to live. And so you have to make an adjustment for that, which we do. And in this case, we came up with even, rather than there being add backs to cash flow, which depreciation is a non-cash item, there was actually further deductions to that negative net income for 2020.
So basically their tax return, when they file a 1040, what I'm trying to get at is it doesn't look like they have enough income other than to support themselves. There's an owner's drawing account, I would suspect, that's involved in this mix. Is that right? And that was the add back or whatever?
Yeah, we look at it and you don't necessarily, sometimes they pay themselves more than they need to, sometimes less for whatever reason. And how so we do look at that, and we get a household cash flow statement to see what is the minimum that they need to break even at home. And we have to assume that distribution has to come out of the business, and we have to account for that so that we can really see, whether it's feasible or not for them to break even.
Okay, so my final question is, Mountain Biz Cap lent them 65.5, 3 years ago, based on, and this was a 66-month loan. Is that correct?
Yes, that's correct.
Was it 60 months of P&I?
Excuse me, I think it was 72 months. Yeah.
72 months. Was there any interest forgiveness, interest only payments on that term?
Let me just double check. Normally we do provide, certainly for startup businesses, interest only periods. And it looks like there were 6 months of interest only.
That's what I figured. Okay, very good. So actually what we're looking at is a 66 months loan. Why is it that Mountain Biz Cap did not go back in and refi the loan? Is it because of the negative cash flow situation and from an actuarial standpoint undoable?
Well, a couple of things here. Is we have several financial partners, obviously MCCF being one, the SBA, USDA. In this case, that original loan was an SBA Community Advantage loan, which is a part of their 7A program, which is probably the SBA's flagship program.
Right.
And it wouldn't be eligible under that program for additional funding. There might, normally you have to have historical cash flow.
Yeah.
And even though it's performed, and even though we've had the pandemic, I don't think that they're going to make exceptions to the SOP, and they haven't been. So that was not a reasonable pathway to increase funding underneath that facility.
I lied. One last question, Christopher. Did they get a PPP loan, and if so, how much?
They didn't get to, let me see, they didn't get it. Well, let me just double check and see if they got it with us.
Okay, yeah.
Yeah, they did get 2 PPP loans, and both have been forgiven.
Okay, how much were they?
The one was for $5,617, and one was for $4,400. So you can actually kind of extrapolate what their, payroll would have been, because that would have been based
That's what I was
upon.
asking.
So both of those have been forgiven, and then they have gotten idle funds. So they've gotten a reasonable amount of assistance in the business, and we really wrestled with, as I said, for the business model. Even though it's continued to get better and better and better from a growth standpoint, it's got to move from where they are, which is a hole in the wall, frankly, with poor visibility, in order for them to, thrive. So,
Okay, thank you, Christopher.
Mm-hmm.
Thank you for your questions, Steve, and Christopher for your answers there. Anybody else have questions or comment, input, concerns? Yeah, I'm not able to see, I don't see any hands raised currently.
Really, this question is for Carl. Carl, I saw the response to your question in the document. Were you satisfied with that answer?
Yes. I'm grappling with a little different issue here, and that is we're not really called upon to approve a loan. We're called upon to manage the fund in total. And that, given that we've only had one go south, that we have we've incurred very little risk. I'm sort of inclined to work with our partner, Mountain BizWorks, because that is where all of our loans have come from. That being said, what's an issue for me is that raises an issue about how we gain knowledge. And my understanding is that this committee, and I think maybe it was you, Tim, that went back and said, can there be a closed door session to disclose more information so that we can make an informed decision? And at that time, the answer I understood was no. I feel like that's a question that needs to be revisited, because we're looking for a level of detail that is inappropriate for a public meeting. So we're stuck in this weird limbo of approving loans with very little information. This is why we're having this one, because we didn't feel like we had enough information. So I'm struggling with how we've constructed this organization, and maybe we need to look at that at some future point. Thank you.
Thank you, Carl. And I can add a little bit more color to that based off of a recent email thread that I didn't want to bog everyone's inboxes. So we didn't include the whole entire committee on there, but we did get a request from our lending partner, Mountain BizWorks, to see if we could do this in a closed session. And we did get some legal input. And at this time, it didn't seem like it would be essentially prudent and legal for us to do that. But I do agree with your sentiments, and I think it warrants further discussion. But we reconsidered it for this meeting, essentially, to make it a closed session, or at least part of it. And the advice we got was no at the current moment. Frank and Tim, do you have anything to add on that topic?
I'm glad to chime in briefly, and Frank, feel free. But we reached out to both city and county legal separately, and they came back with the same answer. And I understand Carl's concern. I pushed for it myself, but the reality is closed session is only something that can occur for reasons indicated directly in the statute. And those reasons are pretty specific. It's, personnel reasons. There is an opening for economic development, but that's for something slightly different than this. And then also for real estate transactions. And I believe the final is consultation with a legal professional, like an attorney. So because of the nature of the state statutes, if it's not explicit that we can do it, the answer is that you cannot, based on how we operate in this state. So.
And Tim stated it perfectly, and I have nothing to add.
Good job, Tim. Rachel?
I'd like to add that we are in the midst of reviewing our structures in the operating guidance, and we had an open question about what is this the role of the credit underwriting committee, and how does it fit with this larger group. And that is up for discussion. The next step is that it's at this point, hoping to be an item on our September agenda, looking at Karen's little box to see if she's nodding that we should be able to have a discussion at that meeting. And so this is an opportunity for us to make sure that fits. I too feel a little bit of that discomfort. We aren't the lender, and we yet are being asked to sort of straddle this role of that fund oversight versus specific loan approval, and it's tricky, and it's not an area that I feel the most comfortable.
Yep, those are all good points, Rachel. Nikki, and then Christopher.
And so, yes, I think that's something that we certainly want to clarify, is to really be clear about what the role of the committee is, and two, what our guiding documents set forth. Because I think part of what we're doing here really functions what I would envision to be the credit underwriting committee, that is allowed somewhat of a deep dive to really ask some more specific questions, that is triggered by the amount of the loan or any information that is deemed within the framework of this credit underwriting committee. And I know that's part of our, I think it's part of the MCCF bylaws that we are looking at, absolutely. But then to also just make sure that all of the duties and services agreements, the exhibits contained therein, like that we're all very clear on exactly what our role is and exactly what the role is of the lender. Because yes, I do think that being clear that it's the participating lender's standard risk parameters that we are, in a sense, verifying at this level is copacetic with what I can see being the role of MCCF, to really just verify that we acknowledge that yes, this loan is within the lender's standard risk parameters. That I think we can ensure that our overall goal of securing, securing the fund and maintaining and monitoring the fund itself is our guiding light. And so with that, I think we've kind of looked at these further follow-up questions. And again, I think it's been a healthy conversation, because yes, when we look at a loan of this size and magnitude, we want to make sure that we ask those questions. But I do think the important point is to be cognizant of what our role is, what the role is of the participating lender, and kind of each be attendant to that lane. So that would be my comment, and I'll stop here.
Yeah, I would welcome broadening with much more detail that initial submission to the fund. I think a lot of these questions are understandable given the context. And my request to go in closed session was mainly because I'm paranoid that I'm going to actually blurt out the name of the client or something like that. So there's no lack of desire to, y'all have as much transparency as whatever the statutes require or whatever. That certainly is very much welcome. We don't, the first thing is do we believe when we make a loan decision, do we believe, it's feasible and they can succeed? That's got to be regardless of whether there's a guarantee or collateral or whatever. And that's sometimes a real wrestle to come to a discernment of that. And every situation is unique and approached uniquely, obviously with certain, basic guiding principles. The other thing I wanted to just address is the one that is in default, and it's actually still a performing business. In this case, in fact, they've opened up a second location under what we think at this point is we're pretty sure, well, we don't know for sure, but they formed another LLC to kind of avoid, I guess, a connection to the existing LLC to whom we have a loan. And so it's not so much that the business failed. It's just that we've got somebody that has just decided to really be non-cooperative at this point. So, we're kind of perplexed as to why. Our history is one of really working patiently with people and, getting really creative to make something work. So just wanted to clarify that that's where that one was brought to you last week or 2 weeks ago.
Thank you for clarifying that, Christopher. I did want to read a comment that Dee put in the chat and then share some of my thoughts as well. She said, our job is oversight and operations based on oversight stamp process because taxpayer funds are involved. I'm listening to everyone's comments and kind of trying to, digest it all into something a little bit cohesive. And, my personal take on this, again, only having been on this committee for a little bit over a year, is that while it is prudent to analyze, the loan parameters on a loan by loan basis, the way I approach this is more from a portfolio standpoint of, we had a small portfolio and now we have all this grant funding that has broadened the portfolio. And, to Dee's point, how do we kind of manage that overall portfolio to be the best steward of that, influx of funds? And essentially the risks that we assess are not necessarily the risks to, the lender, but it's really the risk to the MCCF. And, in the context of this specific loan, I mean, $70,000 out of $3 million is about 2.3% of the fund, essentially. And because we are not a leveraged fund at this moment, that's something to consider, that 2.3%. It's not a huge amount, but it is not insignificant. Also, just a reminder that I feel like we're setting precedents. And so, part of like investing in general, from my background is there is some psychology involved, and, we may now that we have this influx of funding, be a little bit more risk averse. We want to do well by the fund, and we want to, to steward it and make an impact. But maybe there's also this new expectation to essentially perform, like for the fund to perform well. And so I just want to add that in, that there is a little bit of that psychological component as well that may or may not impact the loans that we are now approving, given this influx of funding compared to before when we had a much smaller amount to deal with. So, I think that if and when, as we continue to revisit these governing documents, that we kind of keep that portfolio mindset in view, and how that actually plays out, I think is up for discussion. But I agree with Nikki that it would be good for us to kind of define the lanes that we're in, so that we're not duplicating effort that our lenders are already doing, and also, really kind of deferring to them in the area that they are trained in and specialized in. So any other thoughts or comments or follow-up thoughts to that? I think we're going to have to try to attempt to bring this plane in for our landing. Tim, you have your hand raised?
Yeah, I'll just chime in briefly. I appreciate Christopher and the Mountain BizWorks team sharing this additional information, and hopefully we haven't derailed the process, but I found this informative and instructive. And as we talk, I heard a suggestion for a credit underwriting committee. Maybe that's kind of where this type of information gets vetted, and that might be the right strategy. I don't have the right idea in my mind, but I do think that we should feel comfortable asking these types of questions. And I don't suggest that we re-underwrite or anything like that, but if this is valuable information for the committee, we should probably figure out a way to capture it more regularly, either at the presentation of the loan, or if we feel that this is not relevant to our work, then we need to state that just very clearly as well. So I don't know. I really appreciated hearing from you, Christopher, on this, because you were candid in suggesting that there were things that you had questions about, and I think that's something we need to be talking about. So I appreciate it. Open to any solutions. I want to be, supportive as well. So,
Nikki?
So I just the grounding that I have really does come with our existing documentation, our existing framework that we utilize. And so I was scanning both the rules of procedure, which is a document that I know we're discussing now, the duties and services agreement, and then what I came upon, and I'll just drop a link here in the chat, is Exhibit B to the duties and services agreement. I hope this is the latest version, so I may ask our secretary just to verify if this is in fact the latest version, because I can share my screen for the public to make sure that I think this is it. Yep. Okay. So this is a public document that I found that, again, appeared as if it was our underwriting guidelines that really helped me to frame like what the role is. And I encourage all of our committee members just to refresh themselves with this, because it really does talk about, again, this idea of loan threshold, loan approvals. And so what I would be interested in is just being able to use this. Perhaps we could even convert it to somewhat of a checklist, just so that we can see how the loan measures up with the guiding philosophy that's set forth in this Exhibit B to our duties and services agreement. And so looking at, again, we're touching that max amount with this particular loan. The credit philosophy that's referenced here is to extend the participating lender's reach to be able to provide these loans to some borrowers that exist outside of the normal frame of risk, right? And that's even kind of repeated here under this credit philosophy, saying that, applications that taken as a whole are just outside of participating lenders' standard risk parameters. Because I think we have to honor that, is that some of these may be just outside what we are comfortable with the standard risk, because that's the idea of the fund, is to make investments in in businesses that may be outside of that standard risk, because that's who we're trying to serve, right? And so I would just hope that these things are therefore included in, again, the assessment of risk that comes from the underwriting that's performed. So again, I'm just using this as a resource, and I just wanted to share that with the committee as a helpful resource.
Thank you, Nikki. That is very helpful. And thank you for dropping the link there. I like your idea of a checklist, something a little bit more like visual and like simplified. And I think what I'm picking up on is that some of our points of discussion here, qualms, if you will, maybe more have to do with our process and, you know, just kind of grappling, putting our arms around that. And of course, that's also changing in the process as we speak, you know, as we're revisiting these documents. And, you know, it's maybe not even so much the loan itself that we're looking at right now, but because we don't have a really clear process and understanding of our operations, it's kind of being brought to light when we're looking at these loan requests. And it's hard to, you know, for us to kind of reconcile. So, you know, with that said, I think it would be helpful for us to maybe compartmentalize those two a little bit so that we can at least tend to the current loan at hand, with understanding that there's a lot of work to be done on our end to really fine tune our process, get things more straightforward, more clear, have more clarity on our role, you know, revisit those documents. And, you know, the work that we put in up front now will hopefully help smooth out these loan request, you know, conversations in the future. And I'm encouraged, you know, to what Tim said, that Christopher was willing to just, you know, answer the barrage of questions that we have, and this just even the rigor that our partner put into that loan, that Q&A document, you know, answering every single bullet point. That does give me a degree of confidence as well that they have really done the due diligence on their end, and like you said, Tim, the transparency that Christopher shared. So at this time, does anybody have any closing comments or questions on the loan request at hand, because that is the business that we're trying to take care of today? And, you know, if not, then we can move to take a motion to approve that loan if anybody is inclined to do so, since we are coming up on the end of our time pretty soon here. Sounds like we don't have any follow-up questions or comments. So yeah, so at this time, if anybody feels strongly about doing a motion to approve the loan request, we can take that. If not, then I guess this would mean that we are denying the loan request. Carl?
Yes, I would vote. I would put forth a motion to vote to approve this loan.
I'm going to second that.
So we have a motion and a second. So we will take a vote. All in favor of approving this loan request, please raise your hand or say aye. Rachel, do you have a good visibility into how many people approved it? I, for some reason, can't see hands raised.
I see 6 ayes.
Okay. So it looks like the motion passes.
Do you want to count any nays, please? 1 nay.
So 1 nay and 6 ayes. Okay. Thank you, everyone. I do believe today's conversation was really helpful because it did bring to light, you know, a lot of our the things that we need to work on and improve on on our committee. Really, just admire and respect everyone's input and thoughtful input to this conversation. And I think it's good that we didn't essentially penalize the current applicant with our, as we're working out these processes on the side. So with that being said, I think I'll put some more thought into how we proceed with that process side of the house, how we can streamline this whole process and possibly potentially even revisit the credit underwriting committee and kind of spinning off that part so that we can be more efficient in these conversations. If any of you have any thoughts, feel free to send them my way as well. With that said, we'll move on in our agenda to new business. And Frank, feel free to share, and Nikki, both of you, feel free to share some information with the group on what that is.
So the deputy city clerk has essentially just alerted anyone who works with boards or commissions that the governor's emergency order regarding COVID-19 is coming to an end soon. And with that, we'll need to get some guidance from city council, certainly, about whether or not we will be permitted to continue on with remote meetings. So we're waiting for that guidance from council first. One thing that that's been made clear is the idea of having a hybrid version of a meeting. So some of us in person and others, take care, D, and others remote. That is not a capability that we have right now that we'll be able to support. So once we get this direction from council, then we'll be able to provide more information. But I believe they're going to look for a vote determining how we intend to operate in the future, whether it's continue with remote meetings, or if that's permissible, or returning to in person. So that is forthcoming, but it hasn't been decided yet. Nikki, did I articulate that well? Or miss anything?
I don't think so. I think that's correct. Just to underscore that, I think right now we have the option to do either virtual or in person, but not both. But that's all I would underscore for right now.
Thank you, Frank and Nikki. And Frank, I think when we talked the other day, I don't know if you have any more clarity into this, but there's a possible third option of if we could do one for a period of time and then reassess and essentially take another vote later down the road. If that's a possibility, or are we kind of locked into the decision that we make as a group?
I think that might be a possibility, but until we get better guidance or updated guidance from the deputy city clerk, I can't answer that with certainty, but I think that might be an option for us.
Mm-hmm. I see. Does anyone have any strong opinions or thoughts in either direction at this time?
Selfishly, I like the virtual format for this meeting. And I will say that there is a level of support that staff has to provide on the back end. But I do feel that we get very good participation with this group. Everybody makes the best effort to show up. And I think for the information we're considering and sharing that, it's great for transparency, but also that flexibility. You know, in the past, I've traveled and been able to attend a meeting because we are virtual. So I certainly prefer it, but I'm one of many.
Yep. Karen also made a good point that she is in Durham. Karen, can you drive up once a month to join us? Or we can all take a road trip over there to Durham. It's nice in downtown Durham. I've been there. Rachel also favors virtual. So Frank, do you think that this might be something we would potentially vote on in our next meeting? Beginning
Yes,
of
I believe so.
Okay.
I think it's probably a new business item.
Mm-hmm. Got it. So today we're just kind of planting the thought there for everyone to consider.
Yes.
Okay. Got it. Thank you. So at this time, if there's no other comments on that new business item, we can move on to public comment.
There are no public comments at this time.
Thank you, Francia. All right, everybody. Well, we are coming up on time, so I guess we will end it here for today. Thank you again so much for just all the effort that you guys put into preparing and showing up to this meeting. I will probably put together an email to follow up on the thoughts around process. I know, Karen, you are working diligently, you and your team, on revamping those documents as well. And, I'm looking forward to some more discussion around that. But I think today there were some good suggestions on other things we could do to probably fine tune this process further. So be on the lookout for a follow-up email. We'll probably create another, a few committee meetings to kind of discuss that. Thank you, Christopher, for joining us today, and for preparation and your patience and answering all our questions. We really appreciate it.
Yeah, great questions. Very, very, very justified given the request. So.
Sounds good. Well, thank you, everyone. Have a wonderful rest of your day.
Thanks, everyone.
Thank you.
Take care.
Thanks all.
Bye.